Jim, it's great to have you with us for your perspective on the trader side of things. Let's talk about it. The simple question: can the bulls, can investors believe the two-day rally that we've seen over the last, again, since the lows that we saw on Monday?
Okay, well, here's the issue that I have with that, is that on Monday morning, we got an announcement of unlimited QE, which under normal circumstances would have been an enormous market positive, and it certainly was a market positive. It was dealing with some pretty blatant negatives at the time. So then we really wanted this stimulus package. So the rumors out there were, a $2 trillion minimum. There was some ridiculous rumors that it was going to be a $6 trillion package too. So we get what looks like is going to be the stimulus bill. So two things worry me now. One, that the lawmakers fumbled. Remember, it seems ridiculous, but in 2008, they teed up their stimulus package. Then everyone, including the market, believed it was going to pass, and then at the last minute, it failed, and it caused markets to absolutely get pummeled. That worries out there again. I don't think it's going to happen this time. What I think is a greater worry is that we look back and say we've rallied this way off the lows all week based on QE, based on the stimulus package. Now, what's the next thing to rally on? The obvious answer to that is the next thing to rally on is some really good news regarding the virus itself, but that still seems weeks away to me. So I think that there's a potential for some continued rough roads. I think if 2380 gives up in the S&Ps today, I think that's going to be upon us. If we can settle the week relatively strong, then maybe I'll believe that the worst is behind us.
All right, so Jim, what exactly does it tell you as a trader when you take a look at the price action at the end of the day yesterday? There's no doubt markets ended solidly higher, but there appeared to be a decent sell-off into the closing bell. What do you think was driving it, and is it part of the driving force behind why we're seeing an anticipated negative start to the trading day today?
I think the excuse that the markets used was that there was a potential for the bill not to be passed. Senator Sanders had voiced some objections. But realistically, when you see late-day weakness like that, opposite of late-day strength, it's just underlying a lack of confidence. The market hasn't really done anything to inspire confidence yet. And at the end of the day, people were taking some profits, realizing that the rally we had just gone through maybe isn't that sustainable.
All right, so let's talk a little bit about some of the near-term catalysts beyond just what we saw yesterday, but before the unveiling of a possible vaccine sometime down the line. It will be employment numbers, and this will be the first week that we could see some of the real unemployment numbers pick up in weekly jobless claims. What are you looking for?
Well, I'm not looking that much at this unemployment number today. It's going to be terrible. I hear a lot of people talking about, okay, this is something we all have to watch. It seems like almost kind of a masochistic streak wanting to look at this and just say, wow. We know what we've seen has been unbelievable, but we also know that it has an expiration date on it, or at least we like to believe that, and that's several weeks into the future from now. And not just from, the time from beginning of this to the end from what we've seen from other countries, but also hope to God that warm weather has an effect on this as well. So this catalyst today, looking at the unemployment numbers, here's a hint: it's going to be bad, I think. So I think the real thing to worry to look at is if we can go through the weekend, go through a couple of days, and see things not accelerating. Remember, that was the big, huge worry from 2 weeks ago, is that by now things are going to accelerate hard. So we're right at the spot, in my opinion.